and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. But before that, let's have a look at what the markets are up to. So Cheryl, seems like no stopping for the markets. Good recovery from the day's lowest point, and the sweetness in the sugar stocks is also back.
Absolutely, Shristi rightly put it. Sweetness in the sugar stock is back, and we'll tell you why in a short while from now. But let's take a look at what the markets are doing. And we're taking a bit easy in today's trading session. No doubt we are off the day's lowest point when it comes to the benchmark indices. But nevertheless, we are holding on to 20,900 as of now when it comes to the Nifty. You have Sensex that is around 69,500 levels or so. Nifty Bank also is taking a bit easy, just in line with the benchmark indices in today's trading session. Let's take a look at what the mid-cap 100 index is doing as well as the small-cap index is doing right now. And there you go, outperformance coming in from the broader markets, a marked outperformance when you compare them to benchmark indices, or for the matter of fact, even Nifty Bank. Let's take a look at the list of gainers and losers in trade today, because remember, globally a lot has been happening in the crude market, be it the sugar market or also for the matter of fact even coffee market. A lot of commodities are moving, and sharp movement coming in on that particular front. So on back of the sharp drop coming in the crude oil prices, take a look at what the OMCs are doing, HPCL, BPCL as well as IOC. They are supposed to be the beneficiary along with the paint counters that will benefit from lower crude oil prices, tire counters as well that benefit on back of the lower crude oil prices. But on the flip side, it is going to be a negative one coming in for ONGC, Reliance Industries as well as Oil India. ONGC being the top loser on the Nifty as we speak, followed by Bharti Airtel. That's the one that's declining in trade. Remember that reports suggested that Warburg Pincus would be offloading that stake, and the block deal seemed to have happened. 2% downtick coming in for Bharti Airtel. HUL is down on back of Macquarie report. You have Apollo Hospital, ICICI Bank among the other set of losers. While on the flip side, you have Adani Post, Power Grid, Maruti Suzuki, Ultratech as well as Dr. Reddy's that are holding on to the positive territory. And about the sectoral indices, you have the auto index and the energy index among the top gainers. While on the losing end, it's the FMCG index that's taking a bit easy along with metals. So that's the way how the markets are transpiring. But Shrishti, you did mention about the sweetness back in the sugar counters, and why is that?
Well, it is an ET Now impact, definitely, because Samir got us the story on the sugar counters, because there were concerns regarding the reports which suggest that the government is looking to curb the ethanol production amid the low output this particular season. But we have got clarity on this from our sources. So let's go across to Samir Dikshit to find out more on this.
So this was quite buzzing that government might restrict the ethanol production to a certain extent, or maybe government may impose some sort of strong measures so as to ensure the sugar availability for the domestic market. But now what we are getting to know from top government sources that there is no such plan that government is considering to bring down the ethanol production. There is no such plan. Government is going ahead with its committed plan of 20% ethanol blending by the year 2025, and for the same they are not going to deviate. Currently there is no plan to reduce the ethanol production. This is the broader line that government is considering. And in addition to this, what we are also getting to understand from the government is that as of now there is a stock availability of somewhere around 80 to 85 LMT, the sugar availability. So this 80 to 85 LMT of sugar availability is enough to meet the demand or domestic consumption for next 3 months. So government is constantly saying that they are in a comfortable position when it comes to domestic meeting the domestic demand or the consumption. Moreover, government has put in place certain restrictions. For example, the export quota has for the year sugar year 2023, the export quota was restricted to 61 LMT. Similarly, government is looking to restrict the export quota, ensure domestic availability, and going ahead with the ethanol blending target. So this is what we are getting to know from government sources, that there is no such plan of reducing the ethanol production. Moreover, the sugar availability for domestic market is enough. Government is in a comfortable position, and government will go ahead with the preset target of 20% ethanol blending by year 2025.
All right, thank you so much for that, Sami, for that huge clarification, because of which you've seen a sharp recovery coming on the sugar counters, be Dhampur Sugar, which is now seeing a recovery of approximately 6% from the day's lowest point. You also have Balrampur Chini that's seen a recovery of approximately 7% or so. Sri Renuka, Triveni Engineering, all of them marked recovery coming in for these counters from the day's lowest point. Given the fact that our sources have told ET now is the fact that there is no active plan that is under consideration when it comes to curbing ethanol production, and they are committed to meet the 20% ethanol blending target by 2025. Thank you so much for that, actually, Samir. But it's not only sugar in the commodity space that is seeing sharp movement. In fact, it's the crude oil prices also that are seeing sharp movement, and Brent crude has in fact fallen below the $75 per barrel mark. You also had NYMEX crude that fell below $70 per barrel mark. Remember, Brent crude during month of September was as high as about $97 per barrel mark. But why is crude falling? What are the implications on the companies back home here? My colleague Somit, who is an expert when it comes to oil and gas, is here to tell us exactly why such a movement coming in the crude.
Well, a couple of reasons for the fresh drop in the Brent crude prices. Firstly is the demand concerns coming out from China, and second is the fact that investors are now doubtful on OPEC plus a successful implementation of this production cuts. Now, because of these two factors, they're expecting the oil market to be in surplus, and hence we are seeing this fresh drop when it comes to Brent crude prices. Now, when it comes to the Indian economy, India imports nearly 85% of the crude requirements, so definitely this will benefit the Indian economy, and as per analysts, every $10 per barrel drop in average crude oil prices deflates the current account deficit by around 14 to 15 billion US dollars, which is nearly 0.4% of the GDP, and it also decreases the retail inflation by around 50 to 60 basis points, and wholesale inflation comes down by around 125 to 135 basis points. But when it comes to companies, a host of sector stand to benefit because of lower crude oil prices. Firstly, when it comes to oil refiners, they are one of the major beneficiaries because lower crude oil prices boost the gross marketing margin that the oil marketing companies earn by selling every liter of petrol and diesel. Now, earlier it stood at around 10 rupees on petrol and 3 rupees on diesel. Now, this would further boost for the oil marketing companies if crude prices continue to remain lower at around $75 per barrel. Now, this will, however, benefit the oil marketing companies only. Now, when it comes to pure play refiners or the standalone refiners like MRPL and Chennai Petro, or for that matter Reliance Industries also, they would stand to lose because of this sudden drop in crude oil prices, because there would be a significant inventory losses for the pure play or refiners. Now, when it comes to oil explorers like ONGC, Oil India, Vedanta and HOEC, now it will be negative for them because crude is the main product, and with low crude oil prices, the realizations come down, which have a direct implication on margins and earnings. Now, generally a $5 per barrel drop in Brent crude prices would impact the EPS of ONGC and Oil India by around 7 to 12%. When it comes to paint companies, it's beneficial because nearly 40% of the raw material cost is either directly or indirectly related to crude derivatives. Aviation companies also stand to benefit because nearly 40% of the total cost is fuel cost, and when crude oil prices come down, the fuel cost also reduces. Apart from that, there's lubricant manufacturers, tire manufacturers, cement companies and a host of specialty companies that tend to benefit because a major part of the raw material cost is either directly or indirectly related to crude oil prices, and whenever crude oil prices come down, the raw material prices also go down, which directly benefits their margins going forward.
Well, thank you so much, Somit, for getting us all those details. So, crack in the crude oil prices. Definitely a lot of companies and sectors seem to be benefiting from that. But with this, let's move forward and get the expert take that given the scenario, which stocks and sectors you be focusing on. And with this, let me welcome on board Avinash Gorakshakar, Head Research at Profit Mart Securities, as well as Kunal Bothra on the technical side. A very good morning to both of you. And Avinash, coming to you firstly on your take on the crude oil prices, a sharp drop, but which sectors and stocks that one should be focusing at this point in time?
Yeah, good morning, Shrishti. I think crude oil prices largely would benefit, the oil marketing companies. As everyone is aware, their GRMs are closely connected to the crude oil price. So oil marketing companies, and secondly, companies which are into the lubricant space, companies like Gulf Oil, typically Castrol. I think these are also big beneficiaries because base oil is a derived input from crude oil. So once crude oil prices come down, even base oil prices come down. So these companies should also benefit. And apart from that, as Somit mentioned, paint companies, carbon black companies typically, specialty chemical companies which consume crude, all these companies are definitely going to benefit. I think the paint companies could benefit significantly because for them, crude accounts for almost 65 to 70% of their total cost. So definitely, I think this is a good move. If prices continue to remain where they are, we could expect a bumper quarter 3 and quarter 4 from such companies, and that would obviously lead to a further re-rating in their stock prices.
Uh, Aminash, you want to share anything about the sugar counters in particular? Because yes, no doubt that you had the sugar counters also move on back of what is happening globally, and today you had a domestic news flow as well, which we got sources from government sources say that for now no plan or no active plan under consideration when it comes to curbing the ethanol production. You have a view anything on these companies, sugar companies, or the ones that are linked to ethanol production?
Yeah, I think, see, basically a couple of days back, some news report had come in that government would restrict ethanol from companies which don't manufacture ethanol either from maize or from wheat. And I think to that extent, there was a sell-off in some of the large sugar counters because government was restricting its supplies, from ethanol made from molasses. So I think now with this clarity coming in and with the government giving a commitment that 20% blending of ethanol by 2025 is very much on, I think removes a lot of fear in the markets because clearly ethanol has been one of the very large profit drivers for most of these sugar companies, especially the integrated sugar players. So I think players like Dhampur or for that reason Balrampur Chini, BCL Industries, Associated Alcohol, I think you could see a good amount of bounce. And considering the fact that crude oil prices have of course come down, but the blending ratio currently is just about 10%. So there's enough headroom for growth for these companies. And obviously, we should expect at least a 3 to 4% increase in ethanol prices every time a large order is announced. So I think net, it's a positive development. What happened in the morning was a correction. I think markets would obviously take note of this positive development and obviously, get normalized in the coming weeks.
That's the take on the sugar stocks. Definitely a great and a smart recovery from the day's lowest point. And recovery is what we are seeing in the markets as well, because as we speak, Bank Nifty has now managed to climb back in the green, holding at levels of 46,860, as well as Nifty 50 is also getting prepped up to get back in the green territory, just down about 13 points. But Kunal, coming to you for your take on the crude prices as well as the sectors that are in focus, because a lot of these sectors from tire companies to paint companies are now showing good gains. So any stock that's on your radar?
Well, I think, first on the crude oil prices, I would believe that this is a strong trend in the making, that we've seen the Brent crude prices falling from 90.95, I think, some time back towards 75 and below where it's trading right now. So that's a clear indication of trend in the making, and that's why you've actually seen many of the crude sensitives, showing signs of not just a breakout for themselves, but a sustenance of a trend for many of these names. The OMCs, starting to be the first and more prominent stocks in that category. They've done exceptionally well and still look quite strong going forward. So I believe, a dip or a buy or a correction could be taken as an advantage to buy into these names. Paint stocks, the likes of Asian Paint specifically, I think is something which has not participated in a very strong kind of a manner in this leg of rally. But I believe that stock could be something which looks attractive. From the tire space, I believe Apollo Tyres and Seat are the two names which are looking quite strong and fresh for a breakout. They've already confirmed a breakout for themselves. But again, these are the spaces which look attractive.
All right, so that's a view coming in from Kunal when it comes to the crude companies. But Kunal, anything on the sugar space in particular? Because we've seen globally a lot of commodities also move. Any particular sugar count that is actually showing up on your charts?
See, I think there are two names which are actually popping on the charts. One is Balrampur Chini, and the fact that the stock has come back towards its 200-day moving average. I think today's low for Balrampur Chini was around 400 mark, 398, 400, and the stock coincided exactly with the 200-day moving average. You look at the last 6-7 instances, the stock has had this tendency of breaking below those levels, staying for at those levels for a couple of days, and then starting a course of a strong uptrend. I believe that should be a good opportunity to try and buy into at current levels. EID Parry is also another name. The stock had been doing pretty well. Yesterday, in fact, the stock gave a breakout above 550 mark. Today, it's scaled slightly lower than those 550 levels, but again, looks attractive.
All right, so that's the view coming in on the sugar counters as well, Balrampur Chini as well as EID Parry. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related query. Viewers, you know what you got to do. You have to message us on the WhatsApp number with your stock query, and we will get them addressed with our experts. And talking about our experts, we have Kunal Bothra as well as Avinash Gorakhshikar joining us on the show. Once again, good morning to you, Kunal, as well as Avinash. Thank you so much for joining us on ET Now. And let me kickstart this with the first query coming to you, Avinash. This one is coming from Rajesh Kakar. He's writing to us from Punjab. He has Lupin 700 shares at a price of 800 rupees per share. He wants to know whether it makes sense to book profits or continue to hold on to it. What's your take on Lupin and especially the pharma space as a whole? We've seen that rally after a phase of a year or two consolidation coming in for these pharma counters. Now Lupin has picked up steam. It is it's over 1,200. Do you think it's time for Rajesh to book profits or stay put with the pharma space?
No, I think Cheryl, Lupin, I think is a stock which should be held on because after almost 12 to 18 months of consolidation and underperformance, Lupin has shown very strong numbers for Q2. In fact, the management commentary has also been very strong, and in all their markets, specifically Japan as well as US, I think demand recovery is pretty strong. My sense is that already the investor has made 50% profit, so probably he can book out some gains, but hold on to the rest stock. Because my sense is that some further re-rating is possible over the next 12 to 15 months. So probably, if he can hold on for some more time, a further risk reward is definitely possible. So better would be that he holds on and keeps a time frame of at least 12 to 15 months.
Okay, moving on to the next query then, and Kunal, coming to you. Bharadwaj is holding 320 shares of Industar at an average price of 209 rupees. Can he buy more at current market price, looking to stay invested for the next 2 to 3 years?
Yeah, so I think both of them, both of the points could be something which you can consider to stay invested as well as look to buy. The stock is nearing a breakout about this 190-95 mark. Yes, it's been a time testing zone for Industar, but I think it could just be a matter of time that the stock would get into a breakout zone. So I would suggest a buy as well as a hold from a medium to long term perspective. All
right, Kunal, the next one coming from Philip. And Philip has a query on DMart, 13 shares which he's holding from the levels of 3,497 rupees per share. Now he wants to know whether he should stay put with this or look to exit, and if you could help him with a short-term target that he should keep in mind while talking about Avenue Supermarts.
See, I think, remember, I think at closer to that 3,500 mark, 3,600 mark is where we've initiated a buy for DMart when the stock had exactly coincided with the 200-day moving average. I would still be very bullish on the stock in the medium term prospects. Now, I'm not sure what time frame you are considering for your investments, but if it's specifically very short term, then I think maybe at current levels of 4,150, 200, you can consider booking profits, but only if your time horizon is at least 1.5 odd year from current levels, which is 18 months plus, then you may look out for higher targets. My targets for DMart would be closer to 5,500 over that kind of a time frame.
Okay, Avinash, the next query is on PFC. Shrikant from Bangalore holding 1,000 shares and his average price is 244 rupees, sitting at good gains in this particular counter. But what should be the target price in PFC? There seems to be no stopping for this counter.
My guess is, the investor has bought in PFC at a very good entry point. If he can hold on for the next 12 to 15 months, around 425 to 450 could be a good range where the stock could possibly get a fair value. My sense is that the quantity is also pretty large, so if he can probably book out 25-30% of his holdings and make his capital free, so the remaining shares become free of cost, and obviously hold on the rest for the next 12 to 15 months. A fair value of around 425 to 450 is very much possible.
All right, this one is coming in from Nitin, writing from the state of Maharashtra. He has a query on Avalon Tech as well as IRCTC. Avalon Tech is looking to invest afresh, while for IRCTC he already has at the levels of 472 rupees per share. Kunal, what's your take on IRCTC? Should he add some more on in his portfolio? Avalon Tech, since it's a recently listed counter, I'm unsure you can talk on it. I will take that to Avinash later.
Yeah, so I'll speak on IRCTC. Very interesting stock. I think you should consider to hold on to the stock. I think yesterday and day before, the stock had confirmed a breakout of multiple patterns on the short-term time frame. It's been a major underperformer when you look at the railways performance in the last, I think, 6 months, 9 months, or 12 months as such, which means that the potential for the stock to get into a stronger breakout is much more higher. I would suggest a hold on IRCTC.
Right. And Avinash, what's your take when it comes to Avalon Tech? Do you think it's a good stock for him to enter afresh? Because from his queries, looks like he's not. Yeah, it's fresh investment. So he wants to know whether he should enter this one afresh.
No, I think if the investor has got a 12 to 18-month horizon, then I think within the EMS space, Avalon is a very large player. In fact, they've got global facilities apart from Indian facilities, and I think the kind of opportunity which we are seeing in the EMS space are quite encouraging. So I think despite a weak second quarter, if the investor has a long-term view, at least 12 to 18 months, he can stay invested. Then I think he can definitely accumulate at the current odd levels.
Okay, that's the take on Avalon Tech. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And continuing the same, the next query that I have, Kunal, is coming from Ritesh Ranjan, and he's holding 60 shares of Jubilant Food Work at an average cost of 500 rupees. He wishes to stay invested for the next 2 to 3 years. Can he add more at current market price, or would you suggest to exit?
See, my only concern is with the time frame which you are looking at, because I think Jubilant Food Work over a short to medium term looks attractive, but I'm not sure whether the stock actually has that kind of a firepower to break past about the previous highs and start off a very strong uptrend, because the stock by nature, by its change in terms of behavior, has changed its beta from a beta of 1 plus to, I think, sub 1 levels, which means that the stock moves in its own trajectory and own trend. So my only concern is that if in case the stock doesn't change its beta over the next maybe couple of months or in the next couple of quarters, then you might see the stock stagnating, even though it may move up higher, but the pace would be very gradual for Jubilant Food. That's the only concern. So my advice would be to stick with it from a short-term perspective, and then try and maybe look out for 5%, 10% kind of swings to participate, and the stock would give you better opportunities to try and chip into again at lower levels.
Okay, Avinash, the next query that I have is on BEL. Rohit Chauhan is holding 300 shares at a price of 141 rupees. Should he go ahead and increase his holding, or maybe wait out for some correction and then add on?
I think he can hold on for some time. Maybe buying the stock at a lower level could, give him a better risk reward, because recently, BEL has announced that they've got fresh orders of almost 3,500 crores, and visibility for BEL for the next 2 years is completely assured. They have a very healthy order book, plus the business is completely debt free. And within the defense space, I think this is one of those undervalued stocks, but I think has run up post the state election results. So I would believe that, if the stock comes down to say around 145, 150 odd levels, then he can start accumulating, but keep a time frame of at least 12 to 18 months to get a decent risk reward.
Okay, the next query is from Saket from Chennai, Kunal, and he wants to know any liquor counter which could be good bet with a short-term investment horizon.
So I think Som Distilleries is something which I had given a call today. I think even yesterday I had flagged off the stock in terms of a breakout. So that's something which you can look out for. The concern with other names like Radico, UBI, I was looking at the recent charts, and especially the last 4-5 days, is because these stocks have run up exceedingly high. The indicators are somewhere overbought. So you may probably expect a more of a plateauing effect into the stock prices, where it may stagnate at current levels plus minus couple of percentage points for some time. So the real opportunity may not arise into the other liquor spaces, liquor stocks, but I think Som Distilleries is something which you can look out for at current levels for a potential target of 325 at least over the very short term.
Okay, Avinash, the next query that I have is on one of the newsmakers today, and that is Paytm. A viewer named Govind is holding 100 shares from a price of 890 rupees. And this particular counter is down about 18% after the analyst call. There are a lot of brokerages downgrades as well. How do you see this move, and what to do next?
No, I think Shrishti, clearly, the stock has corrected because the management has given a guidance that they would be scaling down their postpaid, business. Some sort of impact would also come on the unsecured loan portfolio, basically because of the RBI, increase in the risk weightages. But I think at this level, the downside seems to be completely protected. I would not be surprised that the stock could bounce back also quite sharply. Maybe for the next 1 or 2 quarters, there could be some challenges on the business side. But I would believe that somebody who's looking at the next 2 years could definitely look at buying Paytm at these levels. It looks attractive, but yes, from a longer term perspective, I think in the near term the stock could underperform.
Okay, moving on to the next one. And Kunal, the next query is from Madhuri. Wants a short-term outlook on SAIL as well as Naukri. She's holding both of these counters but sitting at a 5% loss. So good to hold on or maybe look out for other opportunities?
Well, look, I think according to me, I would believe that the metal stocks are at the verge of a breakout or some sort of a turnaround on a short-term play at least. So I'll stick with SAIL, and I believe that the stock could head towards at least 110, 115 mark over the very short term, and it all depends on how the metal cycle actually evolves, whether the Nifty Metal Index actually breaks past or gets into that momentum zone. And we've seen historically, just to add one point, that when metal stocks get into a breakout, the breakouts could be quite ferocious and sharp, like for example what we saw for real estate stocks in the last 2 months or so. Now for the other name, Naukri or InfoEdge, even that stock is heading towards a breakout. It's already confirmed a breakout on the indicator fronts on the weekly time frame charts. Hopefully the stock manages to give a closing above this 4800 levels. Say by tomorrow, we could be getting into a confirmation zone on the upside for InfoEdge. So even that's a stock which you should hold on.
All right, this one is coming in from Badri. He's writing to us from Bangalore. And Kunal, this one is also for you. 50 shares of delivery he's holding from the levels of about 380 rupees per share. He wants to know what's the future outlook for this particular counter. Good time to accumulate or wait for further correction in this one. Delivery, this one has not had a great ride. 3 months, 11% downturn coming in for this one. What's your outlook on this, on the charts, Kunal, now?
See, I would suggest not to average at current levels. Now, even though technically the stock has come back towards its 200-day moving average, but there was a higher chunk of volume or a bigger chunk of volume which had happened to the stock almost 15-20 days back, and that resulted into the stock breaking below its major support and going into a downward trend, which means that possibly the selling pressure and the effect for the stock price would remain for some more time. I would believe that wait out for maybe one more round of correction. I would sense the stock should come back towards at least sub 350 mark over the near term. That's where we may consider looking at the prospects for the stock at that point of time.
All right, this next query that I have is coming in from Peter. He wants to know whether he should look to buy Sandhar Technologies for the longer term at current price. Avinash, have you been able to, or have you been actually following the stock when it comes to the fundamentals for the long term? It's a good play, 28% in the last 3 months. Do you think some more scope of good returns for the long term are likely?
Yeah, I think within the auto component space, the company has got a very good clientele consisting of the two-wheeler and the passenger car segment. And I think consistently we have seen good numbers reported by the company. So I think around 500 odd rupees, if the investor has a 12 to 18 month time frame, he can definitely look at buying into the stock. Keep a time frame of 12 to at least 15 months. We believe that FY25 should be a lot better compared to FY24. And looking at the revival in the two-wheeler market, I think Sandhar should definitely be.
Okay, Kunal, the next query is on Tamil Nadu Mercantile Bank. It's been 1 year almost the stock got listed, but RS Mundada is holding 100 shares from a price of 526 rupees. What's the short-term outlook on this?
See, illiquid name, or rather the liquidity is very, very tight into the stock. It's now trading at 515, gone through a downtrend in the last 2-3 months from 600 levels to 515. So again, a struggling chart. Doesn't look like that the stock may get into any kind of a major revival over the near term, unless if it breaks past about the 535 mark, which is the previous minor swing high for the stock price. That could be a breakout point above which you may consider buying.
All right, this one is coming to you, Avinash. This one is written from Ephraim. He's writing to us all the way from Dubai, and he has a query on Oracle financials. He has 100 shares of Oracle at a price around 4,217 rupees per share. He wants to know for the longer term, would it be advisable for him to add on some more of Oracle in his portfolio and hold on to this counter for the longer term?
I think, Cheryl, this is one company which is a product IT company, and majority of the shares are held by Oracle. There have some reports, for a very long time that finally this stock will get delisted at a significant premium. But even if you look at the fundamentals of this business, it's a very solid, thriving business with very good operating margins. And I think, if the investor has at least a 2 to 3 year kind of time frame, then I think he can even add at the current odd levels. I would believe, the upside could be significant, but I think he needs to give in a lot of time here because, once the stock gets, delisted, I think the premium would be significant. It's a matter of time. So I think he can add on at the current level, but keep a time frame of at least 2 years plus.
Yeah, Avinash, the next query that I have is coming from Seema, and she's holding 500 shares of Xenotech Lab at a price of 66. I'm not sure whether you tracked this one or not, but I could see that the stock is quite illiquid. So any take on this one?
Yeah, I think it's a very low liquidity kind of counter, but I think numbers have been pretty encouraging. And I think if the investor has a long-term view, at least the next couple of years, then I think you can hold on because typically, whenever liquidity in such companies is limited and participation from large investors is absent, it takes a long time for the stocks to get re-rated. So I would believe that unless the investor has a really long-term view of 2 years plus, then only I think one can stay invested. Otherwise, in such illiquid counters, I would believe it's better to stay away.
Give a breather to Avinash, though it's a long-term query. Let me come to you, Kunal. This one is coming in from Shrikant. He's writing to us from Bangalore and he's talking about CAMS. He's holding this counter since the IPO and his average buy was about 1,278 rupees per share. Should he continue to hold or look to accumulate for the long term? CAMS, definitely he would be smiling right now because this particular counter actually saw a long phase of consolidation as well. But despite that, he stayed put with this one. So Kunal, do you advise him to stay put with it? And do you think it makes sense to add some more at this level?
So I think just stay put with the holdings which you have on CAMS. Yes, it's done quite well over the last few months, and after a huge amount of consolidation, it looks like that the stock is gearing up for a start of an uptrend. But it's just that the last couple of days of price trends have probably could probably put in a break into the stock price trends on an immediate basis. So you could probably expect the stock to maybe get into a drag more. Better level if you're looking to time it could be closer to 2,600 for CAMS.
Okay, Avinash, once again coming to you, Saurav wants to know an outlook on Aarti Industries as well as Thermax. Can he go ahead and buy these stocks at current market price? He wants a short-term view on these.
No, I think my guess is, Thermax looks very well positioned within the boiler space from the capital goods segment. And I think, rather than having a short-term view, if the investor can at least spend about 6 to 8 months here, I think one could expect a decent upside here. The stock is fundamentally very solid. I think corporate capex has been growing very rapidly, and that should benefit Thermax quite significantly. So I think if he can keep a time of 6 to 8 months, he should get a decent risk reward in the short to medium term.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. Some more queries on the other side. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. And let's continue taking your queries. And this one is coming in from Reema, writing to us from Pune. And Kunal, she wants to know about Max Healthcare, 80 shares at a price of average price of around 544 rupees per share. She's sitting on good, healthy set of profits at this point in time. What sort of a target should she look at for Max Healthcare, or do you think the target has surpassed?
Yeah, so I think 680, 700 should have been the target range for the stock. It's gone through a correction, and you look at the historical way in which the stock corrects. It has an odd tendency of going into a couple of days of sharp correction, mild bounce back, but then the correction extends for the stock. So I think that aspect, current levels, could be a good zone where you may consider booking out profits. And if in case the stock throws in an opportunity of a further leg of correction, say closer to 620 odd mark, that could be a point where you may consider buying again.
Okay, Kunal, the next query is from Bhagwan, and firstly he's congratulating or rather thanking you for your call on GSFC. He has booked good profits in this one, but now he has purchased 500 shares of L&T Finance. Wants your take on this one? His buy price is 133 rupees. Good to book out profits or continue to hold on, and what time period?
Thank you so much for that. First of all, so on L&T Finance, my view has been very bullish over, I think, the last many months. Now, on the short-term basis, the stock has seen a lot of negative news flow, and we all know what's surrounding for many of these NBFC stocks. But I believe that possibly in the next couple of months, you may probably get in a better if you're looking to buy L&T Finance or average the stock, I think it could probably just stay over here for some more time before it gets into any major kind of a breakout mode. So I'm not expecting any major fireworks on the very short-term charts for L&T Finance. Broadly, I think 155, maybe plus minus 5-7 rupees range is what I'm expecting for the stock price over the near term. But once the stock gets into a breakout mode, I think the next set of targets which you can keep for the stock should be at 175 plus at least.
All right, with that, let's kickstart with the rapid fire then. And this one is coming from John from Chennai, long-term investor, Unichem Labs, 100 shares at a price of 203.4 rupees per share. Avinash, should he stay put with this one or should he book profits and move out of Unichem?
No, I think he should hold on. Better prospects are expected in the coming year.
Okay, Avinash, what's your take on Bank of Maharashtra? Sudeep Chaudhary has bought 500 shares from a price of 46 rupees. Any targets on this one?
I think he could look at a target price of around 55 to 58, at least in the near term.
All right, this one is coming from Pushpa from Bangalore, AB Capital at a price of 174 rupees per share, 2,000 shares. Kunal, what should he do? Or sell out of this one or continue to hold on to it for the short term?
Continue to hold.
Avinash, between Globus Spirit as well as GHCL, any of the stock you like for medium to long term perspective? Question is from Subrata Mukherjee.
I think Global Spirits could be a better bet because they are into liquor as well as ethanol, which I think is a very good combination. So I think at current levels, Global Spirits would obviously give him a better risk reward.
Okay, Kunal, I'm sure that this is going to make your eyes pop because Gautam has 10,000 shares of Tata Motors purchased at the level of 86 rupees per share, and he wants to know whether he should stay put with this for the next 2 years. He's saying he set a target of around 1,280 rupees per share on Tata Motors. Do you think that it is achievable or should he book out some part profits?
I think you should hold on.
Okay, moving on to the next one, and Narasimha Rao, Avinash wants to know, can he go ahead and buy SpiceJet for a long term? Looks quite risky, but what will be your advice?
So I think within the aviation space, I think I would prefer Indigo. I think SpiceJet can be avoided.
Okay, Kabir Bedi has 1,000 shares of IKO Lighting at the price of around 354 rupees per share. Do you think it makes sense to stay put with this particular counter for the next 2 to 3 years, or 2 to 3 months? But Avinash, your take?
No, I think looking at the longer term aspects of the business and the scalability potential, I think he can hold on. Definitely over the next, say, 12 to 18 months, a better risk reward can be expected. So continue to hold.
Okay, but with this, viewers, it's time's up on the rapid fire session as well as on the Buy Now Sell Now show. Thank you so much, Kunal, as well as Avinash, for joining us today and helping all our viewers resolve their stock-related queries.
All right, and coming up next, or rather before we wind down on this edition of Buy Now Sell Now, is the distributor's exclusive episode as part of our ongoing campaign Informed Investing by HSBC Mutual Fund, which is in partnership with ET Now. This episode offers valuable insights into taking the crucial initial steps towards investing. Remember, you can watch the entire episode today at 4:30 p.m. and the repeat telecast on December 9th at 4:30 p.m. But for now,